Hey everyone, welcome back to Grumpy Monkey Trading. My name is Michael. I hope wherever you are the temperature is reasonable because it is unreasonably hot here in California and I would like it to go away as fast as humanly possible. We've had enough heat here this year. I'm sure you've heard about the drought. Really would like to just get into the winter. Maybe some El Nino could come and bring us some water. That'd be super nice. I'd like to have a lawn that's actually green and not dead. On the show today, we will be talking about the BananaRama, so we'll take Cramer's stocks from this week's lightning round, take a look at some of those, so stay tuned. Blackstone, BS. Cramer says it's a winner, not a loser, and he likes it very much. And he's liked it for a long time. If you remember a couple months ago, we did a bit on Blackstone as well, so we already have the chart for it. And really nothing has changed since that point. If you like it, it is still a reasonable buying point, as it is range bound within the wedge pattern that we talked about previously. So higher highs, higher lows. That's typically a bearish pattern though, and so it could pop out and go down. Another indication of a bearish pattern is that this could be a shoulder, this a head, at which point we're putting in another shoulder. That's also bearish and it would go down. However, on the positive side, we had this really nice 5-wave increment here, this nice bullish pattern, and then we've had the trail off, so we could be forming the bottom of a cup, which typically happens at the end of bullish patterns, at which point buying could resume and then the trend pick up from here. So there's lots of opportunity, but a lot of potential warning signs. The big deal breaker for me would be if it broke this support line. At that point, you would check out. But if you like it, then you have a good buying opportunity now. CVS. Cramer says he likes CVS. The stock's gotten pummeled here, and he thinks the chart's terrible, but he thinks it's a buy now. He says even if it goes lower, buy it at 95, buy it at 92, buy it again at 90. Basically buy some for your grandma, some for your mom, some for your neighbors, some for your lawyer, and at the end you would have a pretty good position that overall, multi-years later, you'd get a nice return. I don't mind that. I have no problem with CVS as a whole. What I don't understand are his targets. Like, if we're hitting 95, 92, etc., I am way more concerned about this stock than where we are right now, which is in a nice symmetrical pattern, triangle pattern, where we have the top of the triangle here and the lower part of the triangle there. Typically, in those situations, you resume the case of the previous trend, which is positive. We've had a really long, nice, positive run. So just so long as those conditions are present, and we're even challenging that top line right now, everything's okay. My major concern would be if we start hitting 95, 92, 90, there would be no reason to really get into it right away. You would want to wait for that to play out a bit. So yeah, don't mind CVS, don't understand the targets. United Rentals, URI. Cramer says he's on the fence about United Rentals. He thinks it could go up if Caterpillar goes up, and that it's down a lot already. He says, remember, it's like XPO, it's considered to be a roll-up. Well, to us, it's considered to be in a downward wedge pattern, so where we have lower highs and lower lows. Typically, those result in bullish formations once they've completed. And you can see also that we have quite a few touches on this pattern, which tends to happen as we reach the conclusion. So I think at this point, we're going to start to stabilize. And maybe when we have a bit better volume, we can push out of that triangle. I don't necessarily think it's going to happen next week. I think we're probably going to settle a little bit. The market is due as a whole to settle, and you may be able to pick it up at 65, maybe even 60. We do have this nice support line here that we've crossed back over, so I expect that to now be our support line in maintaining our current position. So if you like it, not a bad place to get into it, possibly in the next few days. United Pacific Railway, UNP. Cramer says it's incredible. It's his favorite railway, bumping Thomas the Tank Engine down to number 2 in his heart. Certainly not number 2 in my son's heart, though, as my son is quite heavily addicted to Thomas right now. It's pretty much all he wants to talk about. Back to UNP, though. I am willing to like Union Pacific, Cramer says, but this group is having a major move and it's China-related. Union Pacific isn't going to have a good quarter, and he doesn't think anyone cares. For us in the charting world, we've had this nice 5-wave drop down here that's brought down the price quite a bit, and we've had the 4-wave recovery to complete the pattern. And now we're evaluating what's going to happen. So from an RSI standpoint, we still have a long ways to go. But from a stochastic point, we're starting to enter over bought territory. Not by a lot, but we're starting to get there. So in a couple weeks, we might look for a retraction. That to me says that it's going to kind of hover in this area. It may take a run at 102.5. It'll eventually take a run at that line, but it's going to kind of sit in this region a little while, particularly if the quarter results are bad. I don't see it rocketing off for those reasons, but all of that could be brewing into a long-term play that then brings it back up. Raytheon, RTN, Kramer says it's fantastic and incredible, must take first place in his heart, bumping G.I. Joe down to number 2. He says the defense stocks are in a secular bull market. They're not even cutting the budget here. And look at the paper. Is there anyone that doesn't want a Patriot missile? I mean, I want a Patriot missile in my backyard, and I like my neighbors. Well, I like my neighbors too. I don't feel like militarizing my backyard. Looking at Raytheon, we're in a upwards wedge pattern, so we have higher highs and higher lows. Over the long term, that tends to break bearish. I also wonder really how high can this really go? Arguably, we're chasing the support line here. That would be the next logical possible high if it were to break this support line. One thing that I don't like is that I don't like when it goes high on the overbought stochastics and then immediately comes back shortly after. That to me I find to be more bearish than anything. So you really, I think, have to like Raytheon because you are buying it if you're getting in at the top. You're buying it at the top, and I don't really like to do that. BP, Kramer says that if you're in your mid-20s, getting into a growth oil stock is a good idea. So something like a Conco or a Cimarex, but only if they pull back. He says that the market has moved too much too soon. And I agree with that. It's been a huge move off of the lows with no real good logical reason. Nothing fundamentally has changed with the market. Demand is still where it is. Supply is still where it is. Nothing's changed with OPEC. Nothing's changed with Russia. So there isn't a huge reason for why this is all changed up for the long term. So we're going to hit some highs because people are excited about oil right now, but I think we're going to come back and there'll be other buying opportunities for oil. So I think it's pretty reasonable to expect that we'll smash into this resistance line. I think at that point we may have a settling period and there'll be new buying opportunities if you're interested to get into the market. NXPI Semiconductors. So Kramer says this market has changed. NXPI is high growth along with Avago and Skyworks. Right now, these are in a bear phase. When the bear phase is over, we can buy them. Well, that's kind of common sense. We don't know when it is going to switch, though. I don't want to get in front of a freight train. NXPI at 75, maybe we will rethink. So right now, we are in this nice symmetrical triangle pattern, which is exciting to me. I like symmetrical triangle patterns because generally whatever way you bust out of pretty aggressively, and that turns into more of a long-term trend. If he's thinking $75 though, that means that we would, similar to before when he had a prediction, we would really bust through a major support line and then be forced into a bearish pattern. So it'll be interesting to watch this one. I think it's very exciting. As a symmetrical, though, they do tend to resume their previous pattern, which in this case was positive. So keep an eye on it. I know I will. Salesforce, CRM. Kramer says, look, Salesforce had a remarkable quarter. It's a high growth stock in a market that appreciates value. I bet you can get a little rotation, maybe a little 72, 73 action. But if you're taking a 3 to 5 year view, then just go and buy it because it has value and it's a stock that's going to hold up. So let's take a look at where it's at. I really like that it broke above this previous resistance line last week and held it very nicely. I think that's always a good sign. It's kind of bouncing in between those two lines there. It's up to what it does this week. So I think it's probably going to come back and tap on that line. If we look at the stochastics, we can see that we're starting to get into an overbought region. And I don't like typically when it does the little hook in. It either means that they're going to merge, in which case it becomes very hard to read, or that it's going to hook down fairly shortly, in which case that's not necessarily positive unless you're looking to get into it, in which case that means there's a buying opportunity. Kramer says 72, 73, that kind of takes us into this region. I think if it breaks through this support line, though, it's really going to be more like 70, 71 would be a good entry point to take a look at. For a breakout, we're looking for it to get above this line. If it does, that's our breakout opportunity, and the 2 thumbs up. TASR, TASR. Kramer says the stock has come down, and we like the stock in the teens. It went way too high and now has come down to a sustainable level, and he wants to buy it. If you remember a few months ago, we talked about it probably around this region, and Kramer's very high on it at that point as well. Since that point, it dipped below that support line and did go for a bit of a fun ride, but has recovered into this more stable period. I would say that I'm just scared about the head and shoulders potential for this. So we have a nice head and a shoulder. I would be scared of another shoulder forming, although I do like the stock, and it is certainly encouraging to hear someone come out for it a couple times in a row. So I just keep an eye on it, though. I don't see any compelling reason to buy. There's no surge, so good opportunity to just look at the quarterly results and really evaluate it at that point. Twitter, TWTR. This was a request from a viewer. We do a lot on Twitter, so I thought I would add that one in for them. Obviously, some interesting news with Jack Dorsey coming in. Also, Project Lightning really starting to get rolled out with the Moments functionality. I got a chance to play with it on my phone. I really loved and hated it at the same moment. I thought it was a completely unique experience that once it becomes mature technology, they can flesh it out. I'm a little concerned about how easy it is for people that aren't familiar with Twitter to really understand how to get to it, how to use it, and how to integrate it with their own system. That wasn't super intuitive, but I think as a concept, as a news concept and a video concept, it was really compelling. That obviously came out in some of the results this week, where Twitter went BananaRama and rammed into this resistance line pretty hard. If it can get through that, which I don't think will happen this week because the daily indicates that stochastics are overbought, but if it can get through it in the short term, then we could go on quite a nice little run. This is our next resistance line, our next major resistance to tackle, so probably around the 32 region, hopefully in the next month or two, depending on how things go. So right now, excitement and positivity, never a bad thing. All right, everyone, that's our show for today. Thank you for watching. Please subscribe. It's super important. I would like to get to the 100 mark. Pretty soon we're at about 71 subscribers. Thank you for subscribing. Please raise that total. That'd be really appreciated. All right, see you again next week.